Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive in. Let's take a look, see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com. That is where I dive deeper into all of these topics, looking for potential investment opportunities. You can get some savings. We've got a Black Friday coupon code. It's one word, Black Friday. It's in the description link below if you want to look. You can sign up, and I do share my opinions freely about the companies that I am buying and acquiring. And then you guys can ask me questions about those companies, and I can answer your questions, either technical analysis questions or even fundamental questions about the companies that we're looking at. We've got Mike Alfred here. He says, just got out of an in-person meeting with one of the largest Bitcoin holders in the world. He was adamant that BTC could see $150,000 this year and $1 million next year. You don't want to fade this guy. Things are about to get absolutely insane. Guys, that's where people can get into trouble. This type of mentality where people are so gung ho and so excited. Now, I'm not saying it can't happen, but I'm just showing you that I'm starting to see posts like this everywhere. And this is where your sentiment is starting to spike here. it's going up and up and up. Now, is it possible that that occurs? It very well is possible. Now, I don't have anything in any crypto. I don't play that game, but they are only talking about price here. They are focused on price. And, some people say, well, as the price goes up, that means that the adoption goes up. My question to everyone who owns crypto then, why do you own it? And my guess is the answer for most people, if you were to honestly give an honest answer, is that they think the price will go up. And that is the only reason that anyone owns that thing. Now, in investing, what we do, just to run a parallel to this, in investing, we look at companies and we want to own the company because we want to provide the good or the service to that person. And that good or service provides earnings to the company, and then the company is generally at a better valuation than what the business is worth. And you're providing goods and services, bringing in cash flow for the company, and you want to be a part of the company in selling those goods and services. And obviously, we want the price to go up too. But you can link price and value in a business or a company. I don't know how to do that with Bitcoin. Bitcoin, they've got obviously a cost curve, but the problem is it's a fixed amount of coins. So the cost to produce Bitcoin continues to go up. I can't remember the exact amount, but it could be $80,000 or $90,000 a coin. And that will continue to go higher and higher and higher and higher. The problem is, what if the sentiment around Bitcoin drops dramatically and the price, like say, gets cut in half or goes down 90% from where it's at today, and then you're way below the cost curve? What happens when there's no mining and then there's no innate demand for Bitcoin? Like it's not like silver or copper or some of these things where you get below the cost curve, supply cuts back, but then you need demand needs the supply to build products. It needs it for products and stuff like that. So there could be a situation in the future where you have a fixed supply and supply doesn't get cut back like you would in a commodity. And then the demand never really comes back. And I don't know what happens to the miners under that scenario there. But obviously, that's not on people's mind at this moment. Oil Bandit says on Chinese EVs and LNG trucks, while vehicle production seems to be topping, electric vehicles now make 30% of production. 3 million of those are for the export markets. Domestically, close to 50% of total new vehicle sales are EVs, but they mean less than 15% of the total fleet. I'm not afraid yet. So vehicle production, automobiles, new energy vehicles, obviously they're going way up from a very low base of basically zero down here. And then cumulative sales over 10 years, new sales 3-month mean. So obviously on a percentage basis, they're going way up because you're growing from a very small base. There is ways that you can play the electric vehicle, trend, and that is in the batteries and the materials that go into the vehicle's batteries, and or what goes into electric vehicles, which is copper and stuff like that. And that's the way I'm playing it. I'm not playing specific companies or models of vehicles. I just want to provide to play the inputs to this trend. Brian Sullivan says energy is the most important sector to the stock market right now and will be for the next 5 or 10 years. Okay, he's got my attention here because that's what I think. It says, is it the biggest? No. Does the group's earnings really matter to the overall market? No. But global demand for power is off the charts and rising exponentially. No energy, no growth in AI. And if you believe in AI, it is important to the market. It's going to be more of everything. Change my mind. I actually totally agree with this. And the way that I'm playing the tech bubble or move, it's all from energy. Now, why don't I participate directly in the AI companies? It all comes down to the value of the business that's behind it. It also comes down to the risk. As things go up and they become more richly valued, which are a lot of the growth stocks, they become riskier and riskier if that growth never materializes. If I can buy energy companies that no one gives a crap about, and right now, energy is being the most important sector to the stock market for the next 5 or 10 years. We also have a huge surge in liquefied natural gas going on. And I've got oil, which is cheap to gold, and gold, which is cheap to equities and technology equities. And we've got natural gas, which is cheap to oil. Why wouldn't I just buy the cheapest stuff in the market, which is the most important sector to the stock market, which could also be the limiting factor for AI and our growth out in the future? There's other things that also stack on top of this. Credit creation, if there's a problem with our debt, credit will need to be created. Credit creation puts energy into a shortage because energy is what grows gross domestic product, specifically oil. So I can invest in oil and natural gas, still play the AI theme through energy, and I'm doing it on a much larger asymmetry bet with much better valuations. Why wouldn't I play it that way? I can also do it when credit creation and AKA inflation is going up and interest rates are going up. When interest rates go up and hit critical levels, that's generally when tech stocks or growth stocks in general start to slow down and go and potentially even pull back. When interest rates go up, that has not impacted energy. So I'm in the correct market cycle with the correct amount of valuation of the business versus the sector. And energy is like the spot to be based off of the cycles and based off of the valuations. Well, that's what I'll say. TLT, these are bond prices, the 20-year. We took 20 years to climb up, and it only took 4 years to fall. The bond market has broken a few years ago, and here's your shoulder, head, shoulder topping pattern, and then you've broken down. And I still think that this could potentially head lower. This bond market breaking down means interest rates going up. As interest rates go up, that will impact stocks in a negative manner. It's going to be a headwind, specifically technology growth stocks. Patrick Karam says pathways to triple digit silver are possible as long as price stays above that rising support line. Yeah, it could take a while though. So he's got a couple of price projections. His price projections, if you look and go to the right, I see $120, $190, and potentially $285. When I throw mine out there and I look at the potential size of the cup here, of a cup and handle, and you project it on top of it, I get a 300 and something dollar price target, is what I get. And I do that on logarithmic. We got Tavi here. He says, based on earnings yield, Brazilian equities have never been cheaper relative to U.S. stocks. Brazil versus U.S. stocks earning yield differential. And there we are, way up there. The other bottom that I would have purchased would have been 2000, 2001. That would have been a really good time to buy Brazilian equities. That's also when the commodity to stock ratio was favorable, was 99, 2000 bottom. And this would have been the time to buy it right here. But right now, we are way, way, way above that. We are super cheap. And I actually think that Brazilian equities are a good spot to look at. I really do. So what are we thinking here in energy? And what he's got is he's got XLE, which is the ETF of the larger energy companies. They're moving higher. And then crude oil in the black has been basically moving sideways lower over the past couple of years. So what are we thinking here? Are we doing this gap between the two? You can see how close they kind of move together. And then we've got this alligator jaw opening up where we're getting a divergence between the equities and crude oil itself. So is crude oil going to actually eventually move up and meet the equities, or are the equities going to move down? My opinion is that the equities moving up is the right move and crude oil is going to move up with it. And I'm basing that off of a lot of patterns that have broken to the upside for the major oil companies, which are included in XLE. So I find it difficult to imagine that crude oil is going to break down when all of the positioning in the market of the equities like Chevron, ExxonMobil, Suncor, on and on and on and on, have all broken their patterns to the upside. I just find it really difficult to believe that. But it is possible, and that's where I'll leave my opinion at. I was laughing really hard on this. I was scrolling down, and it says world's worst investor, perfect time to go all in. Look at that chart. This is the worst time to go all in when a chart goes vertical. And I started laughing, like uncontrollably laughing at this because I have a feeling that a lot of people are doing this. Perfect time to go all in right at the top. It's funny, guys. I'm sorry. It's funny. Bob Coleman. Let me read this one. It says, well, the first quote from Daniel. Daniel says, Bob, I'm not saying that can't happen, but this is the future. He's talking about Bitcoin. If you are, I have Bitcoin and precious metals. It's the same team. So Bob responds with, I've been in financial business for over 30 years. Cannot tell you how many times I heard, this is the future. It's different this time, and so on. The concern is that Bitcoin is being pumped higher or supported by leveraged players, Wall Street, primary dealers, and others, while at the same time large miners are withholding supply from the market. This is managing or influencing the market on a large scale. The question is, for what purpose? The argument for supporting the US Treasury market becomes much clearer when one understands that tether and stablecoin relationship to Treasury bills. So that's his opinion. He's saying that it's being pumped to basically pump what's behind Bitcoin, which is tether and stablecoins and their relationship to Treasury bills and the buying of those Treasury bills. That's what's going on. And there could be some stuff going on. Now, if there is that connection that he is saying, which I think there is, what does that say about President Trump pushing Bitcoin like he has been? What is that saying? Basically, what they're doing is they're pumping Bitcoin to get more money into the bond market. Energy headline news: missing oil barrels raise doubts over IEA's bearish 2025 outlook. Missing oil barrels. And IEA has been putting out some stuff that's been pretty bearish. There's been a lot of bearish articles in oil too. And I'm not saying just because I have oil investments or energy investments that that they must think the same way that I do. But I do see a strong disconnect between inventory levels, demand, and these bearish articles. It just seems a little bit weird and over the top, in my opinion. TC Energy, 40 billion cubic feet per day of North American natural gas demand growth over the next decade. Didn't our own Minister of Natural Resources call for peak natural gas demand by the end of this decade? Perhaps there is a business case after all. And this is North American natural gas demand forecasted to reach 160 billion cubic feet per day by 2035. And LNG demand is the dark blue. Power demand is the lighter blue. The more yellowish, greenish tint is residential. We've got light blue in commercial, industrial in the black there, and then other on the bottom. So we're seeing the most amount of growth out of LNG demand. Power is going up a little bit. We're also seeing other go up quite a bit here too. Housing starts. So new housing starts, United States housing starts, we did decline just a little bit recently. You can see a little bit of a downtick here to 1.31 million. That's what the new updated thing is. And we do have a falling wedge going on. I do think that this is subject to interest rates. It's a very similar pattern to what we saw in the middle of the 2000s. When they lowered interest rates, the banks, at least in the mid 2000s, also created these loans that they just threw out into the system. The lending is what caused that problem of foreclosures. We very well could follow the same fate in the future if that does replicate again. But right now, we've had a decline in housing starts over time in this falling wedge. We are still not bursting to the upside yet. Peter Schiff says, now that Saylor insists that Bitcoin is digital energy, it's no more digital energy than it is digital gold. If you own Bitcoin, how exactly do you use it to generate power? He said that taking away crude oil would cause mass starvation. Well, what would taking away Bitcoin cause? Wouldn't cause anything. Yes, but oil is oil is everything in the market, guys. Owning Bitcoin would not save you if oil were to peak and go lower. Oil is the master commodity. It's the number one commodity in terms of a lot of metrics, in terms of uses, number of uses. I even think volume is up there for dollar volumes. It has a 99.6% correlation to GDP. So as GDP increases, oil demand increases, and it's linked with a value of 99.6%. So it is linked together, those two relationships, with a 99.6% confidence level, which means they are the same thing for the most part. Here's oil versus the 10-year yield. Who's wrong? There's that gap opening up again. Now, my guess is we've got that same gap, and I wanted to show the gap there between oil and the equities. It's the same gap. Is it possible that oil is trying to be manipulated lower? Maybe. And what it would be for quantitative easing purposes. Like it's almost like QE. And since we've got that disconnect in two areas, yields and oil, and then the equities in oil, it makes me think that something is going on with oil because we have equities and yields are saying the same thing, but oil's the one that is not following. We can also see that we continue to run deficits in what would consider to be a build season, which makes me think that something is going on with the oil price. Because if oil was in fact cheap, shouldn't the inventory levels be going up because of demand destruction? But if demand is not being destroyed and we're actually running deficits in a build season, it means that oil is mispriced. That's my logic behind it. Take it for what it is. Mining visuals, decline in large copper discoveries and the rise of M&A transactions. You can read the full article here. So this is major copper discoveries. And look at how little we've got going on over here. From 2010 onward, it's pretty pathetic. We've got a lot of discoveries up here in the late 90s, mid 90s, and still in the mid 2000s. And we've drastically reduced our findings from 2010 onward. We have a lot of copper that we need to bring online here, guys. We don't have the discoveries or the projects. There's going to be a mismatch in demand and supply out in the future. And and again, this is all oil demand. Copper is a derivative of oil, unless we figure out ways to run these big equipment that isn't oil related. Maybe liquefy natural gas, but that's kind of oil related too, to some degree, fossil fuel. Here's Dan Subushi, however you pronounce it. Bullish for an increasing value of Canadian and American nat gas reserves in 2020. TC Energy talking about that plus 40 billion cubic feet per day to 160. Says a huge supply challenge to get to 160 billion cubic feet per day and sustain as shale tight gas have big initial decline rates. Yeah, we're going to have to drill like heck to get to this level of natural gas production. And guess what? I just so happen to be in some of those investments or all of this. I always like looking at Grady's charts. Always know the very big picture. And for heaven's sake, make the most of this final bull market. This market opportunity, these market opportunities come around very seldom. And this is GDXJ, the gold miners, and the rounded arc cup going on, and how much higher we could go in GDXJ. Massive rounded bottom arc cup in the making, ready to climb the right side, expecting a reverse symmetry move back up to all-time highs, something that moves up pretty quick. Grady here on gold. He says gold is now sitting at the blue rising wedge apex and is at present back above the 8.5-month uptrend line. Gold has now broken the weekly cycle trend line, and it looks really good here to continue higher for gold. It's just doing a breakout and then a retest, and let's see if we can go higher. Investment wisdom, here's some quotes. Some good news about your education. Simply put, if your goal is to beat the market, an MBA or a PhD from a top business school will be of virtually no help, says Joel Greenblatt. Charlie says if you want to go to business school, you will learn a lot of things we don't believe in, that we don't believe. Peter Krauth, gold to silver ratio since 1869. The lower the ratio, that means that silver is closer to the price of gold. 14.8 in the early 1800s, mid 1800s. We went all the way to 100 in 1939, 98 to 1. We also had the all-time high of 125 to 1 in 2020. Now, are we going to come all the way back down to this lower level? I don't know. We'll have to wait and see, but it looks like we did it almost in 1971. When we went way down there in the ratio again. We've been moving ratio-wise up and down in these big cycles. And silver is really cheap today. what I'll say. Here's another one with Grady. Just like silver was, platinum is now sitting right below a historical huge blue breakout line. And Russia, China, and Iran are now stacking silver and platinum, and Russia's looking to banning export of palladium and platinum. Platinum is getting ready. You guys ready in platinum? I am. I've been waiting for this big move here. Hopefully, we get a monster move, and everyone is happy with that move who is a platinum owner. This will obviously impact any of the companies that use platinum in their products. I think this is going to be a big move, guys. Platinum is cheap against silver, it's cheap against gold, and it's cheap against palladium. And every time we've seen this type of setup, palladium was like this in 2009, which is palladium was only, it was in the upper 100s, lower 200s is where it bottomed out at. And it went all the way up to $2,900, I think, around there. Big, big, big move. I think platinum's primed for that to occur next. I think silver's going to have a big move too. And then, speaking of silver, here's silver. I've been saying since the blue mega breakout not to sweat the small wiggles. It posted a large number of charts supporting this, said next target was 35. We got 35.07. Have to follow the charts, not emotions, bias, narratives, opinions, or other. Big 14-year rounded bottom. We are breaking out and moving higher. So here we go. This is ready to go. And we've got the silver miners too. And I cover a lot of silver miners as well on how to play this big move. Steven Strauza says it's been real big cap tech XLK. Price actions telling us to run for the hills. While the narrative is these stocks are only game in town. The summer sell-off looks like initiation of a new downtrend. And it's happening where the ratio peaked during the dot-com bubble of XLK versus the S&P 500. Get ready. We could be seeing a potential top here. Very well could be the case. And that's what we've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got Black Friday coupon code. One word. Get your coupon code ready. We're going to be releasing a midweek update today. Look for it. It's going to be on the website of my opinions of what's going on in the market and with the individual companies. All right, guys. We'll catch you later. This is Finding Value.